my friend and my brother, and a very good evening to everyone on this platform. Let me put forward my sincere and deep appreciation to the leadership of the fellowship, that the Full Gospel Businessmen's Fellowship International Ikeda, the CBD Eminent Persons chapter. So thank you for having me here this evening to speak to our members and friends. And I will do this within the time, set in the agenda for today's meeting. But also, the fellowship will share my slide deck, which means also if there are some things I don't speak to, we'll all have privilege of going through that at our own private time. So, but I will speak to the key issues. So, for the purpose of this conversation, I will share my slides now, and then we take it from there. And I put something here deliberately in the title slide, and that is a byline under the title, Nigeria Domestic Economic Outlook, which actually has two parts. First is review of the economy in year 2025, and how the economy has performed so far in 2026, up until last week, Friday. And then looking at this, what is the outlook? Where do we expect the economy to end this year? So what are the issues in that? What are the drivers? What are the considerations, either in creating wealth or preserving wealth? So now, the macro context actually sets the tone, and this is the way I look at it. I picked this out from the London Economist, newsletter on the 3rd of January. That's like 2 going to 3 weeks now. And this fellow Robert Guest said, all over the world, especially the rich world, he said, people are grumbling about prices. Same thing is happening in Nigeria. Britons gripe about the COSI, that means cost of living, which has become too spending. Spending is a jargon for expensive. In the US, it's a different story. Democrats in America talk of an affordability crisis. And by constantly repeating this, while pointing out that a president who has made billions since returning to power sits in a gilded office, telling people to stop whining that the tariffs have made things costlier. And why are they doing that? They hope to win the midterm elections in November this year. Yes, prices have risen in recent years, sometimes sharply. Same thing has happened in Nigeria. But in the rich countries, wages have risen faster, in which case there is no affordability crisis. Yet, both the economics and the politics are more complicated than that. Generally, all over the world, when things are not looking bright, it is a time for everybody to complain. But when things begin to turn around, people still hold on to the sentiment that things are not working. And so you see a situation where, people will tell you that, look, I want to sell my house, but they want to sell as expensive as possible. But turn the table around. They now want to look at their children buying houses, and they want at the same time their own children to buy houses cheaper. The same way it goes. We can advance for higher pay for labor, but want prices to reduce in the market for all the purchases we make. Same way, we demand improved public service and infrastructure, but we at the same time want to pay lower or no taxes. So contradictions, all right? But within all of this, if you look globally, developing countries, and Nigeria is in that bracket, have 5 common problems, and I call them deficits, which I'm very sure we are all familiar with. They suffer from food deficit, energy deficit, manufacturing deficit, infrastructure deficit, and housing deficit. This appears in varying degrees across the developing world. But if you look at Nigeria, it is also reflected in various ways, which means we are not producing enough in a sustainable manner. Now, if we want to look at policy, then we look at how priorities are set. We look also at the sequence of policies, and we can talk about execution. Of course, in Nigeria, perennially, We have always said our problem is not policies, it's execution of policies. But in more recent times, we even do huge debates and contention over whether what the government of the day has chosen to do is top priority or not. But the question before you and I tonight, and I did it deliberately, the first one is, if this deficit exists in Nigeria, how do we produce more as a nation in all of these 5 areas? But more importantly, your own organization, what are you producing? Or alternatively, what are you helping others to produce? So if what you produce or help others to produce connects to any of these areas of deficit, then you are a business. So that is the context. Now let's look at the global environment where we do business. And what we did in my firm in the last 4 going to 5 years now was to look at what was happening globally and identify challenges that any business person will have to deal with in order to fashion strategic initiatives that will help you not only survive, but stabilize and restart growth or continue to grow if you be growing. But more recently, and this was last year, 2025, we came across this terminology, banning. And then in interpreting it, we said, this in fact is a better illustration and description of what is happening globally than VUCA that we're all used to. So, and the 4 words that make up banning are brittle. That means the environment we operate in. You can see a business doing very well today, wake up tomorrow morning, and they say it is gone. Whichever market you belong to in Nigeria, especially in financial services, whether you are in banking, or you are in pension, or you are in insurance, or you are in capital market, in the last 2 years, there have been significant increases on the minimum regulatory capital in each of the latest was that one announced by SEC on Friday. Okay, so in which case, some players in those markets are still existing. But by the time we get to the deadline for each of these segments that I mentioned, they may suddenly evaporate. That means the environment they're operating is so brittle. This time last week, capital market operators in Nigeria were still confident, fashioning their strategies for making money this year and growing. The SEC announced something on Friday and said minimum capital. For some of them, the increase was completely out of this world. The happily came out today and said, look, for those who manage other people's money, you are carrying what is called AUM. All right? AUM simply refers to money that you gave to someone to manage on your behalf. All right? Now, that money doesn't sit on that entity's balance sheet, unlike what you do when you give money to a bank and deposit. And so the SEC corrected itself today and said what we published on Friday was 10% of the AUM should be their minimum capital. Now came back today and said there was a typographical error. It shouldn't be 10%, it should be 0.1%. Now, anxious means nobody is too sure, especially in the era we are living in, of Trump 2.0 as compared to Trump 1.0. Okay? It's an era where you are not sure of anything. You can wake up tomorrow morning and just tweet something or announce something that nobody could imagine. Non-linear means your company did something last year to survive and make money. There's no guarantee that if you do the same this year, you will get the same result. We then say that non-linear represents the fact that you can't use yesterday's experience to predict today. Neither can you use today's experience to predict tomorrow. That means you must think on your feet and continually do what you are talking about today. That is interrogating the economic and business environment, reshaping and redefining your strategy, and of course, generating new strategic initiatives that will help you survive, grow, make good money within such an environment. Of course, you are also in an environment where generally there is you just cannot readily comprehend it because things are changing at a very rapid pace. So what we did here in these 2 slides, this one and the one following, is to pick out 10 major global disruptions affecting businesses. Ukraine war, we all know that. Recent war invasion of Venezuela. And of course, that gave US access to the largest oil reserves in the world. That's over 300 billion barrels of crude oil. Estimated at about 25% of the crude oil in this world, they are under the belt of Venezuela. So again, that is a number of issues. Of course, macroeconomic instability, artificial intelligence, the place of social media, finding misinformation and disinformation, geopolitics, climate change, BRICS Plus, which of course we know the moment Nigeria joined BRICS Plus as a partner member, Trump looked at Nigeria and said, well, I said if I became president, every country in the world will get minimum of 10% tariff. Nigeria was in the category of 10% tariff. But immediately we joined BRICS Plus as a partner country. Trump marked us out as his enemy. He said, because you are joining my enemies. Because the way these BRICS Plus are doing is that they are trading with one another in their own currency. So therefore boycotting US dollar. So whoever therefore joins them, I see is an enemy of US because you are working against US dollar's dominance in international trade. So he said, I will therefore increase Nigeria's, tariff from 10% to 14%. There's political volatility. We know what is happening now in Iran and the kind of interest going on there, and it's the same all over the world. Okay, Uganda had an election just last week, and they put social media, went black. So even after the election, social media is still not allowed to function in Uganda. Maybe by now we are talking, they probably have done that, but as of this morning, now the status quo. Energy transition. I came across a video today that shows a new technology discovered in one of the Nordic countries where electricity no longer requires wire to transmit. In which case, like what I put in here, electromagnetic waves into energy, which means like you transmit for television, like we are discussing now, and we are on the internet, in which case no wire, no nothing. So there's a technology already discovered and being on pilot test as we speak, where power, electricity can be transmitted without power, without cables and anything. So energy transition, therefore, is going beyond renewable energy. It's not about how can we transmit electricity in a clean manner that will connect to homes, offices, factories, and the rest of them. Okay? Now, within that turbulent world, I have a question for you. The same thing applies to my company. Does your organization, does my organization have a bridge that is strong enough to withstand the turbulence? That is what resilience is all about. Okay? In which case, we ask whether the bridge between your companies today and tomorrow is strong enough to withstand this turbulence. And that strength will come from design of the bridge. That means we are in a period where we must, continually interrogate our business architecture. Then maintenance. How do we ensure that our operations are running without drama? Then ability of that bridge. What is it able to deliver to customers and clients as the case may be? Now, when it comes to the Nigerian macroeconomy, I put a byline here. I said Nigeria's case is a proven one of resilience. And you will see that later, maybe in a couple of minutes, when I come to the conclusion, so that we can have more time to discuss as much as we can today. When I get to the outlook, I will give you 4 figures of outlook that are important for you as a business person in Nigeria in 2026. But the last 24, let me say, in the last 30 months, more or less, that is from 2023 June up until December 2025, now we have started counting 2026. What are the major policy shifts that we have experienced in Nigeria? Unified exchange rate, first subsidy removal, the capitalization of banks, same things apply to insurance, pension, capital market now operators. So the capitalization is no longer a banking issue only. There's also the issue of the business environment itself, and of course, fiscal consolidation, tax reforms, which I put here as the real game changer, and of course, institutions that either were created or existed before, but are now strengthened. Everything towards making Nigeria a more resilient environment to do business. So where did we end 2025, ladies and gentlemen? That is this dashboard. Where did we close? Now, in terms of GDP, we don't yet have the official figures, but we have projections of where our economy ended 2025. But there are also projections in terms of outlook, where we likely end 2026. So that is the first block, top left, GDP growth rate. But one thing we take away from this is that the Nigerian economy has been growing, at least for one, faster than the rate of growth of our population. Secondly, faster than the growth we experienced in the last 10 years. Okay? So which means we are operating in an environment where the economy is growing. The question there would be, is your own business growing? Number one. Then number two, is it growing faster or slower than the economy? If your business is not growing as fast as the Nigerian economy, then there are some entities within this space that are growing at your expense. So you need to take note, therefore, it's not just about growing your business in Nigeria, it's about growing your business faster than the growth rate of the economy. Exchange rates. There are three things we bring out from this, the next two blocks you see here. Exchange rate official, where did we close 2025? At 1,435 naira 76 kobo to $1 US. Then at the parallel market, what we call the roadside, it was 1,496 naira. So, which means official rate, of course, typically was lower than the parallel market rate. That now talks to premium. What the difference between them? The difference between them was 3.78%. That premium. Now, that's where policy comes in. If any economist will interpret this in context of what we call exchange rate economics, that person will say, we take IMF recommendation that if you want to see a stable exchange value of your currency, that premium should not be greater than 5%. Once it is greater than 5%, and consistently and persistently so, you are asking for trouble. I say, which trouble? The trouble of round tripping, where people will start making efforts, whatever it takes, even under the table, to gain access to official dollar. So for them to go and sell at the parallel market because of that difference. Once it is above 5%, problem. But for Nigeria, we got it below 5%, and it remained there for well over a year. That began in November 2024 and lasted up until December 2025. That was good for the economy. Then we looked at the official rate itself. We ended the year 31st of December 2025. Where was this rate? 31st of December 2024. How do they compare? We see an appreciation of 6.97%. How about the parallel market? We also saw there an appreciation of 12.08%. So in terms of exchange rate, it was good for the economy, even though at a much higher level than what we knew historically. But it has been stable for 13 months up until the end of 2025. Monetary policy rate, 27%. It went as high as 27.5, and then CBN reduced it in July, and of course, later maintained 27% at the November meeting, which means 27.5 in July. The Monetary Policy Commission of CBN met in September. They reduced it to 27%. Then their final meeting, November 2025, they kept it still at 27%. Two different interpretations. So they can connect it to another element on this slide. At 27%, and as a signal rate, what this meant was that Naira assets, that is any financial instrument or asset people can invest in, whose rate of return will be tagged to this MPR, will have a high rate of return. That became attractive to investors. So a lot of monies came into Naira assets. And that also featured in our external results, because this became attractive to foreign investors, both diaspora Nigerians and foreigners. So a lot of money poured into Nigeria for that reason. So when you now observe that CBN was not too eager to reduce MPR, despite that inflation rate started going down steadily since April 2025. It went all the way down to 14.45% in November 2025, then ticked up a little to 15.15 in December because of the base effect, okay, that we had in December 2024, which became the new base, okay, for computing inflation rate. But what is also means is that inflation rate in Nigeria have been coming down, which is good news to investors, okay? And that is part of why some of them still maintain their investment in Nigeria. Now, coming to the external reserves, for the reasons I mentioned and the continued attractiveness of the Nigerian economy to foreign investors, whether in terms of those who invested, in fact, manufacturing in Nigeria is strengthening, and we'll talk about that later. And of course, other kinds of investment, portfolio investment and the rest of them. Our foreign reserves also grew to a 6-year peak at the end of 2025, $45.5 billion. That figure of 45.5 is actually a 30-day moving average that central bank uses in the data they publish. But the actual figure was almost $47 billion. But what is the relevance of this? In forming an opinion looking forward. This particular reserve has two components. There is a blocked portion and there's a liquid portion. The liquid portion is what is available to pay for our bills, import bills and the rest of it, whatever we are buying from the rest of the world. We normally take that liquid portion and compare with our foreign trade data. How much did we import? Based on data available for January to September last year, our average monthly import bill, when we took that and used it to divide the liquid external reserves, it gave us 13.03 months. That means if Nigeria doesn't sell anything to anywhere else in the world, we have enough money in the pocket to pay for anything we want to buy or obligations for the next 13 months. That's how we interpret it. But now, in this giving confidence to investors and other players in the economy, what is the recommendation by IMF? IMF says you need reserves that will be minimum of 3 months cover. Here, Nigeria has 13.03 months. That means you have in excess of what IMF recommends to have as minimum about 10.03 months in excess. So you can understand now where the kind of interest we are seeing in our capital market is coming from. Again, the stock market in Nigeria was perhaps one of the best performing in 2025. All right? With year-to-date return, end of the year, at 51.19%. That is almost double the rate of inflation. Which means if your own portfolio of stocks in the Nigerian stock market behaved like the market itself, the total market itself for equities, then the rate of return at 51.19% will have given you a return that was almost twice the rate of inflation. So you can see why that market is attracting more investors of diverse variety. Market capitalization, 99.3 trillion naira. That again was a gain compared to end of 2024 of 58.34%. And that was quite huge. Oil price, end of the year, was $63.42 per barrel. And then production, 1.652 million barrels, which of course was above the average for the preceding 3 years of 21 to 23, and even compared to 2024, where we have data official now, January to November, and of course, gave us 1.544 for 2024. This is the figure for comparable period in 2025. So at 1.652 compared to 1.544, which again meant an improvement in production. Now, all of this, and I've said, what has happened since this year began? What is the official exchange rate as of last week Friday? That was 16th of January. What for the parallel market? What was premium? Was there appreciation? Yes, in the official market. How about parallel market? Depreciation, but less than 1%. MPR, still the same. Inflation rate, we are still talking of December. All right? But price of crude oil, Nigeria's crude, has gone up from $63.42 to the barrel end of 2025. And by the first half of January this year, as of Thursday last week, it was $68.23 per barrel. So, which means that Nigerian crude is attracting a higher value in the international oil markets. How about stock market? In the space of only 2 weeks thereabout, the year-to-date return of the stock market as of last week Friday was 6.76%. Again, that is quite positive. How about external reserve? It has also grown from $45.5 billion end of December 25 to $45.86 billion as at last week, Thursday. How many months of cover? That has also improved from 13.03 months, December 31st, 2025, to 13.14 months as of 15th of January, last week, Thursday. Now, behind each and all of these are the following data. Remember, I told you we get this. What these charts show you are the trends. I've given you the spot data, end of 25 and then end of last week. But what are the trends like since May 2023 when Tinubu came into office? What has been the trend with external reserves, exchange rates, oil prices, oil export and production, inflation rate, stock market performance, maximum lending rate, even the performance managers index? Then the impact of the unified exchange rates on the external sector, which speaks to our imports and our exports. Of course, we exported a lot more, so our total trade also grew. The trade surplus has now evolved and grown stronger. So we see a strong FX implication in all of this, where non-oil exports for the first half of this year had grown significantly compared to 2024. Now, talking about the outlook, and this takes us to the final point, before I now talk about what I recommend that you should do this year. What is the outlook like? There are what you call the drivers. What are the things you look at to make a decision, whether you operate in business in Nigeria currently, or you are even a foreign investor eyeing Nigerians whether to come to invest in Nigeria or not. So these are the things people look at. What is the population? Estimated as of July 2025, 237.53 million people, 6th largest in the world. Median age, 18.1 years. So large population, but mostly youthful, which means any business you are into, if you are not planning for how to capture the youth of today as your clients and customers tomorrow, then your strategy is faulty. Equally, more people are moving to urban areas in Nigeria, which means urban population has expanded. And that is why generally you find that the rate of inflation urban is persistently greater than the rate of inflation in the rural areas, because more pressure is coming in the urban areas, and that of course is also affecting housing and infrastructure especially. There is deepening internet penetration. There's also tele-density, very high, but access to internet, Nigeria ranks number 11 in the world in access to internet. But we are 7th in the world when you consider what percentage of adults access the internet with their mobile devices. We are number 7 in the world. What does that mean? It means if you are doing business in Nigeria or you are anywhere else in the world where your business is connected to Nigeria, it does you a lot of good if people can get some information on your business on the internet, whether your website or any of the social media, handles or wherever. Where people can type the name of your company or even your own name on a search engine and get information about you or your business that can attract them. So I will leave this other one because there are obvious things. We've talked about exchange rate, we've talked about interest rates, even treasury bills and bonds. Then, of course, we know about local refining. As at this weekend, that is this Saturday, we had data put out where, in fact, Dangote Refinery said we are now producing and distributing a lot more of refined petroleum products than before the last 3 months thereabout. But of course, even marketers now said, we prefer to buy from him. Why did that happen? He also changed his marketing mix. And so now saying that, look, instead of buying this huge volume I had before, you can buy smaller volume. So everybody turned to him. And of course, we can see the impact of that also on our external trade. So what we spent importing refined petroleum products, it accounted for about 39.1% of our imports value, has now changed. So we no longer import that much in terms of fuel. If there is import at all, it's done by that refinery for crude oil. But also government came and said, look, you must sell crude oil in Nigeria to our local refineries, not only Dangote. There are also modular refineries in Delta, in Edo State as well. And of course, a number of others springing up. But there are also even large plate refineries that are coming up. 1 to 50,000 and a few others, 200,000 and so on and so forth. Which means outlook in terms of supply of refined petroleum products. Give Nigeria another 2 or 3 years. We will not only be self-sufficient in refined products, we'll in fact start exporting massively to the rest of the world. We read in the news today that Dangote has given a $340 million mandate to the same company that served as his consultant and an EPC contractor to deliver the current, refinery to upscale it to 1.4 million barrels per day. So in which case he announced it, but he has taken another step toward the realization of 1.4 million barrels per day away from 0.65 million barrels per day. Manufacturing is reviving, and there's, of course, expanding interest in non-oil exports. Infrastructure is improving, road construction all over Nigeria, a good number of them coming out as concrete roads. Okay? Now, if you take all of this, and this is the outlook, what we've done in our firm is to say, okay, let's look at these major macroeconomic indices. Growth rate of the economy, which is very key. That's what everybody talks about. The monetary policy rate, inflation rate, interest rate, that is lending, exchange rate, crude oil price, which is critical to our economy because, like it or not, crude oil is still a key factor in Nigeria's economy. Our external reserves, the treasury bills rate. Now, one thing CBN did also in 2025 was to recouple treasury bill rate with the monetary policy rate. During Emefiele's time, they were decoupled. Okay? But now they've been coupled together, which means whenever MPR is moving, you should be able to see that reflect in the treasury bill rate. And of course, you can now calculate the yield and whatever from there. Now, how did we end 2025? We still have as forecast the GDP growth rate. The forecast in BA Consult is 4.03%. And of course, what do we expect for this year? Our own outlook for this year is a growth of 4.51%. Now, why am I talking about this? Because that's where the whole thing begins. How do you expect the economy to grow? We issued this, our own outlook, first week of December 2025. All right? About mid-2025, Central Bank of Nigeria issued its own outlook for the first time. They never did it before. And they issued one for the first time. And so, what does CBN expect in terms of growth of the economy this year? 4.49%. Very interesting for us in BA Consult because a number of what we have here as forecast, when CBN released its own outlook, it was as if they looked at what we had, but I also told myself that it means that there's no rocket science to outlook. There are data to look at. There are things, what we put as assumptions in the last column here, that drive where you put your own projection. If you follow these assumptions that are the drivers, and you leave out sentiment and stay with data, you cannot be faulted easily. All right? So that was what CBN came out with, just like 2 basis points less than our own in BA Consult. Then last week, the World Bank put out its global economic prospects, GEP, as we call it. And the World Bank said, by the close of last year, December, we have said the Nigerian economy will grow this year by 3.7%, but we have changed our mind. Our outlook for Nigeria this year is that the economy will grow by 4.4%. Then, ladies and gentlemen, only this morning, IMF released its own outlook as well about Nigeria. And they also said the economy will grow by 4.4%. But the reason BA gave here, which we did first week of December, it is the same thing all of them made reference to. We, in our own instance, said reforms will begin to pay off, and that will lead to faster growth. Quite interestingly is what the rest of them are saying, both the World Bank and IMF, that increased their own outlook from 3.7 to 4.4, cited the same reason that we gave here. Monetary policy rate, for the reason I said earlier on, inflation will have to go deeper for CBN to reduce MPR significantly. So we expect the reduction will just be symbolic, down from 27 end of 2025 to 24.5%. Where we differ a little from CBN is in inflation rate. Our own expectation in BA Consult is that the inflation rate in Nigeria this year end will go single digit. But of course, it will be upper single digit, 9.84%. CBN projects that it will be around 12 point something percent. Okay? I've not gotten what IMF and World Bank put out in their new outlook that was published between last week and this morning. Okay? But for us in BA Consult, exchange rate, we see Naira stabilizing at an average of 1,420 Naira to the dollar. And why is that so? If this economy will grow, there still be some import content. The import content will bring some pressure in terms of demand for foreign currencies. So until we get to a point where the upcoming local refineries become operational, and then we completely stop importing refined products, we call them white products. We completely stop that because we don't have enough for the domestic market and also exporting to the rest of the world. Already we have achieved that in fertilizer. We've already achieved that also in cement. All right? So we have sufficient capacity locally to take care of the market here. But when people say, oh, why is cement still expensive? In fact, there's a pending question from a journalist asking me about that since last week Friday that I've not responded to. And the lady said she wants to know why cement is still expensive. So I just smiled. But for me, it's very simple. Construction is taking place all over the country, and most of them are concrete roads. If they are concrete roads, cement is a major content to that. So there's a huge demand for cement because of construction of, concrete roads. So anywhere there is increase in demand, it puts pressure on price as well. So all of this interplay, and that is why we think the Naira will not appreciate significantly, as some people expect, but neither will it depreciate because of the changing narrative in terms of our foreign trade and, of course, the demand for foreign currencies. Crude oil price, okay, we closed at 63.42 end of last year, 2025. We expect that it will go to about 66.77, not minding what Trump is doing with Venezuela, because what he's doing also has triggered some concerns globally in the sense that he said, now that U.S. has kidnapped Maduro, Venezuela will dance to his tunes. Any crude oil belonging to Venezuela that he grabs, not minding whether that crude oil was produced with Chinese technology and money, and therefore there's an existing contract to supply the crude to China, that it will seize the crude, they will sell it, and then we split the proceeds 50-50 between Venezuela and America. I don't know yet where that will end, but I'm sure he just pronounced his own. But I don't think that's the end of it. So when we look at all that, then also people say, oh, price of crude oil will go to $50 per barrel this year. But in our position in BA Consult is different. And why is that so? If you check the data of the demand for crude oil globally today, and the outlook for the demand of crude oil this year, there will be only a drop of 2 million barrels. In spite of what Trump is doing and whatever is happening, there's a dampening demand by only 2 million barrels per day. So that cannot bring any huge dampening to the price of crude oil this year. Now, in terms of climate change, winter is worsening, okay, in the temperate regions. So, of course, the tropical regions are getting hotter as well. So there'll be demand for energy anyway. And there's also a clear indication that alternative energy is tanking. And thanks to Trump, who also doesn't believe in, climate change. And therefore, the efforts being made in regards to alternative energy has also tanked in a way. Then our external reserves, our own expectation is that Nigeria will close this year at $50.86 billion. Surprisingly, when Central Bank brought out his own outlook, they said Nigeria will close out at $51 billion. So we told ourselves, it seems as if a number of things we projected are similar to what CBN is saying. On treasury bill rate, we are about at the same level, 15.2%. So what should you do? What are the implications for your business? Okay, macro conditions are stabilizing. Business confidence is improving. Inflation is easing. FX convergence is improving cost visibility. Recapitalization and capital flow signal improve credit depth in banking. There's also investment and growth, of course, strategy. Then also, what does it mean for you? It means if inflation still is high, although we expect it will drop, that means you must do proper prioritizing of investment in capital assets. That's why we said you may need to defer aggressive expansion and ensure you phase your growth based on priority. And of course, coming to policy and structural opportunities, tax reforms, subsidy removal, and identification reward compliant, formal, and efficient farms. That means you must aim to comply. Of course, institutions, as I said at the beginning, are strengthened. Bank of Agriculture, more capital, which we have been advocating for almost 15 years. Just think about it. Jonathan's time, Buhari's time, nothing happened. This time around, BOA recapitalized. All right? Credit guarantee never existed. That institution was created anew. It began public interaction July last year. I was the keynote speaker, so I can say quite a lot about that. But as an idea, we started that way back when we did financial sector strategy for the year 2020. I was there when we began it. I was involved. Consumer credit also has become part of the Nigerian, financial ecosystem. It existed on paper, but that was the first thing that took me to Aso Rock in 2007, when President Obasanjo launched the Nigerian Consumer Credit Policy. That was the title. I still have the document. Nigerian Consumer Credit Policy. He launched it 2007, and that was where the idea died. But now an institution has been created with that name. The Nigerian Consumer Credit Corporation. We call it Credit Corp. Mortgage schemes also have been strengthened and revived. Okay? But all of these are creating opportunities variously. So let's see the end notes. What now specific things should you do? Number one, and this comes from what I said earlier on, you must transform your business digitally. And as you are doing that, you must also build cyber resilience. Because the more of digitalization we see around us and we are involved with, the more exposed we are to cyber risk. So as you are transforming digitally, because you are operating in a world that more and more business and transactions are done on digital platforms, but you must also be conscious of cybersecurity. So you build cyber resilience. Number two, we are in an era where artificial intelligence has become important, both for individuals and for businesses. AI will not take your job as a person. But if you don't learn how to use AI tools, AI will take your job. So it's about learning to use AI tools. Now, coming to businesses, as of 2023, AI was just in conversation. By 2024, companies began to adopt and deploy AI. But 2025 was a different ballgame entirely. That was when the agentic AI came into operation. So, and the idea is that you need to also interrogate that space to adopt, to embed, and sustain agentic AI in your operation. That means from descriptive, AI helps you to understand that descriptive. It can also help you through analytics to do diagnostics. It can also predict and tell you that, look, based on the data you put here, which I've also diagnosed for you, this is where you will likely end the year if you are going along this route. That's the trajectory. It can now also prescribe That means make recommendations to you on what needs to change, which is a basic strategic question I ask anywhere I'm invited or my firm is invited to do strategy for any organization. The basic and standard question is what needs to change. AI can help you in that regard. Number 3, in the environment we operate in now, you can't be Lone Ranger. It's a time to explore strategic partnerships, and they don't need to be people in the same business with you, which means you can be, let's say, you produce potato chips, just to illustrate, but your partner, your strategic partner, is an IT company. Just to illustrate how diverse those two operations are, IT and then production and packaging and marketing of potato chips. They seem unconnected, but the world we live in now, strategic partnership is looking at creating a common platform where both of you can put value, extract more value from the ecosystem and the economy, and so you create more value for both entities. Number 4, you need to continually interrogate membership economy. What I mean by membership economy is that every organization has people centrally that come as shareholders, directors, management, other staff, customers, then vendors, then there are, in occasions, volunteers, contributors, and so on and so forth. Anything that represents human beings, we can put together and call them your members. So membership economy now says, what benefit do they get for being a part of your organization, whether they are inside or outside? So what do they benefit from being a part of your organization? So you continually interrogate that, because what you want are people that are involved and also engaged. Those are the two operating words in membership economy. They are involved and engaged. And why will they be? Because there's value they get from being a part. I mean, just like we were told earlier on this particular program, what members benefit from being a part of Full Gospel Businessmen's Fellowship International. Finally, you must also track regulations that impact the sector where you do business and ensure you comply. Because the world we live in now, a lot more of technology is being applied to track compliance of not only corporate entities, even individuals with the laws. Take, for example, in Nigeria, with the tax reforms. I've been involved in advocating for this for years, at least actively since 1997. If you ask someone like me, I'm one of the happiest with these tax reforms because I've been involved in that space as far back as 1997, where we identified 40-something taxes and levies in Nigeria. We got to a head at over 60, almost 70, before these reforms were done. Okay? So in which case, if we now live in an era where government is applying by law, because it's part of NTA, Nigerian Tax Act 2025, that we're operating now, it brought in tax intelligence, which means, like we say in corporate governance, it allows you to comply on your own, submit your returns, they evaluate your returns, and then they look at your lifestyle. If there's a disparity between your lifestyle and the returns you file, then they invite you to their office. You sit down and discuss it. How can you say you earn 1 million naira in a month and you're able to afford a 700,000 naira return ticket to Abuja, just to illustrate? We call that tax intelligence, which is part of this law now. So if you want to avoid the inconvenience and, of course, penalties and other things that may come, even embarrassment in some instances, it is better to comply. And compliance may also mean you have to develop some tools. So these are, again, I brought this back because I showed this last year when we had this conversation. It's just to give you an idea that all these opportunities have not changed. And what I would say is, if the economy is going to grow stronger by everyone doing outlook about the Nigerian economy, then it's a time for you to think big. If your company did a particular, achieve something last year, then you should aim to achieve more than that this year. We had a retreat in my office today to review what the team has put together as their plan for the year. And I was happy and excited when the team said their plan is to more than double what we achieved last year, which itself was a record in the history of beer consult, and I thank God for that. Okay, I give God all the glory. But the team says they want to more than double that, and I was happy about that. There's a board of a company I sit on. It's a very big one. I mean, generating income, revenue in billions. All right. When the management brought the budget for this year, even we, the directors, were afraid for them. We had to ask them, even though I have done outlook on the Nigerian economy, I expect strong growth this year. But this, your budget is too aggressive. The MD said, yes, I saw it. But I decided to allow the ED and the team bring this to the board so that they won't feel that I'm the one discouraging them. So we said, take a look at it, review it and come back. But we give you the approval by circulation. So, but again, similar to what I saw in my own company today when I visited the office and we had this conversation, that management also has an aggressive, goal for this year. So for me, it aligns with my last line here, think big. So finally, and this is a statement I came across. Finally, said the author is unknown, although it's often attributed to Oscar Wilde. He said, everything is going to be fine in the end, full stop. If it is not fine, then it is not the end. That means if you have not achieved your goal, the end has not come. If you are leaving Egypt for the promised land, if you have not gone into the promised land, your trek continues, your fight continues. You don't give up. That is my interpretation of this. So thank you very much, ladies and gentlemen. I believe
So there's a question here, sir. Prof. My question is, why is this positive outlook not being felt on the streets? It seems like things are getting tougher and the economic indicators are saying something different. Prof, please, if you can address this question, we will be grateful.
Okay, I was looking at probably taking the questions so that we can take as many as possible and save time. But if you want me to answer them one by one, that's also fine.
Okay, so, sir.
Do I go ahead with this?
Please go ahead. This is the only question we have right now.
Oh, okay,
so
great.
This is only question we have right now.
All right, thank you so very much. Now, when it comes to what we call in economics trickle down means at the macro level, the economy is doing well. And then trickle down means it gets down to the micro level. So the question then is that we have seen this positive outlook. Macroeconomy has stabilized and is showing signs of growth. But the man on the street is not feeling it yet. Now, even though that question is valid, no doubt, the data tells me different. That the man on the street is actually feeling it, they're not admitting that. And I'll give 4 illustrations that I believe every one of us here can relate with. Number 1 is to take into account 2 important shifts in policy. And I will start with NEL fund, that is student loans, okay? As an undergraduate in the 1970s, I enjoyed that, student loans. But after our generation, it evaporated. Now it has been brought back. What does it mean in terms of impact on the man on the street? If the man on the street has a child in the university in Nigeria, public university, and that child applies online because there won't be any contact between your child and any government official. It's strictly a digital thing. Go to the portal of NEL Fund, drop your application there, submit the necessary documents, states, give them also your bank account and your name. They process it, you become eligible. Right there and then, once it's approved, the payment of your child or ward's school fees is direct to the institution. Now, what does that mean to the man on the street? It means if your child is a beneficiary, and as we speak now, there are about 600,000 Nigerian undergraduates that have benefited so far from that. What does it mean? It means I don't need to bring money out of my pocket to pay my child or my ward school fees. Yes, which means government didn't give me the money directly, but what it made money available to do has made me not to need to spend money on my child's education any longer. But beyond paying the school fees, my child will also get 20,000 naira stipend every month, which is free. That one is not a loan. Even the loan itself is interest free and will not be repaid until 3 years after. Even 3 years after, your child must have a job. If your child doesn't get a job, God forbid, for the next 10 years, that loan is not due for repayment. Part of it also is that even when your child finds a job, that scheme will also consider how much is your child earning. It puts a limit to what your child should pay back out of what he or she is earning. All of those are in there, which means that is a trickle down already. But those who benefit may not talk about it. That's one. Number two, the consumer credit I mentioned earlier is open to anybody who is working in Nigeria and earning salary. And what does it do? It says this loan is available to buy vehicles, to buy furniture for your house, to buy television for your house, refrigerators, deep freezers, computers, telephones, and all manner of digital devices. Those loans are available for that. But the loan will come at 2/3 of whatever the banks are charging. So if banks are charging 30% interest rate on their loans, under that scheme, you will pay 20%. If for any reason bank lending rate drops to, let's say, 21% per annum, then the loan applicable for consumer credit will be 14%. So anything the banks are charging, 2/3 is what they will pay under that scheme. So that also is trickle down, because I don't need to now work and start accumulating cash to be able to change the furniture in my house. Insofar as I have a job and I earn salary, I become eligible for that. That's also trickle down. Now, beyond that, if you read last week, Thursday, the business day edition of Thursday last week, you can go check it. It reported that December 2025 was the first time in 12 years that Nigeria did not experience tomato scarcity in December. First time in 12 years. Why did that happen? Because with the reforms, a lot of investors have seen that as a deficit area to invest in. So a lot of investment went into that. That increased the volume of tomato available, and that killed the scarcity. How about yam? The price of yam cut by 50%. If you talk of rice, also the same thing. We know how much we bought a bag of rice December 24 compared to December 25. For me, all of those are trickled down one way or the other. Okay? So, but are we there yet? No, we are not. Which is why people like us, who are policy advocates, keep reminding Tinubu's government that, please, what you have done thus far, do more of it. And then look at other areas where we need to do further work so that we can make this reform really its effect felt by everyone. But there's no doubt that the effect, let me give another one that relates to infrastructure. In fact, this came from what somebody wrote on a platform I belong to about 2 weeks ago. The man said he was writing because he was very angry. And I said, angry about what? Let me read this one. The man said he lives in Ekiti State and that the road between Ado-Ekiti and Akure used to be very bad, and that it took well over 2 hours to travel Akure to Adedipe, but that a part of the dual carriageway had been finished, and that now Akure to Adedipe is 30 minutes. So I now wanted to find out, why is he angry? If it's taking you 30 minutes, which is like 1.5 hours less than what it took you before from Adedipe to Akure, why are you angry? The man said he's angry because people plying that road are not saying it, that it is now better. So in my own view, I said, well, people will complain when things are not good. But when things are good, not everybody will comment and acknowledge that. It's normal part of human behavior. It's a global thing as we speak. Because all over the world as of today, there is distrust of government. It's not just in Nigeria. It's all over the world. But there was a study done on that I think something I came across it in October 2025. It's a global phenomenon. So But for us, what we do as policy advocates is that we keep pointing out what this government needs to do further to make the man on the street not only feel it, they begin to acknowledge it. That's already happening, but they need to deepen the reform. So when you see everybody saying that, oh, this economy is getting better, you cannot get trickle down without stabilizing the macro. That's where the issue is. That's why I said your question is very correct and apt, but already there are signs that this is happening. So thank you very much.
Thank you, Prof. We have more questions.
Oh,
right?
yes.
So I will read them, and yeah, we have a couple of more questions. But I would like to also recognize Barrister Favor Victory, National Vice President, International Outreaches from the Full Gospel. Thank you so much for joining us tonight. All right, final questions for tonight. Thanks, Prof. So there's a question on benefits of being a member of this outreach. We'll come back to that. But please, let's take the questions for Prof. Please,
Okay.
what should be the asset allocation in percentage terms for an investor between the capital market, fixed income for a 60-year-old person? That's the first question. Second question, the outlook is indeed positive. My consideration is this: where do we generate the indices that culminates to the results above? Do we generate these indices solely from the government, or the aggregation or components of the society make up the whole? And that's the second question. A third question, Prof, you didn't say anything about the impact of the 2027 election with respect to economic activities from Q3 and 4. Are we saying that it will not impact commercial activities? Are we being very optimistic? That's another question for you, sir. Then, okay, a couple more are coming in. Okay, just one more. I heard the facilitator made mention of certain economic indices like exchange, price of fuel, etc. and was expecting him to juxtapose that with what it was before Tinubu came in, and he did not say anything regarding that. What about the newly signed 2009 ASU federal government agreement as part of the trickle-down effect? Okay, that's just a comment. That's a comment. Okay, so those are the questions.
Okay, thank you very much. Thank you. I will take them very quickly. The first one speaks to asset allocation. Well, I can't give a straight answer to that, and you know why. Because when it comes to a portfolio, incidentally, I do a lot of, I have the privilege, let me see, of playing within that space. I chair the investment committee of 2 asset management companies, and I chair the board of another one. So I'm involved directly in that field. So, but I can't construct a portfolio for you without an understanding of your needs and then what you also expect. So it's not so if I do that now, it will just be hypothetical. All right. But if we look at the way things are, I mean, by all means, this year, all the outlook about capital market indicate that the market will still grow stronger this year. That's the outlook. When you read what different outlooks by different entities and some professionals within that space, the market is expected to get stronger this year. So if I look at that, then, as you said, between capital market and fixed income securities, well, if you go by the data, what they say, capital market, I will weigh at 60, 70%. If I go by what happened last year, I will weigh that way 70, 30, or at the very extreme 60, 40. All right. But like I said, I'm not giving you that now as my recommendation. Because to do a recommendation, I need to know your profile and a number of other things. The next question says, outlook is positive. The indices, were they from government or accumulated also from private sector players? Well, what I can tell you clearly here is that there are some data that by their nature, they are official. We call them official data. But there are some data that we in the private sector generate. That is why, for example, in fact, recently I was invited by someone that was contacted by the central bank that the CBN now from this year wants to have, in fact, I think that answers your question directly. Now they're trying to bring together some experts who have been doing outlook on the economy so that on an ongoing basis, they will interact with them so that what we get as private sector outlook, engagement actors, they will also now compare with their own, see where the gaps are so that they can improve what they have at outlook. We have been doing this in BA Consult since 1997. Okay, so we are one of the first in Nigeria to actually do economic outlook. Perhaps the first, let me say. Because when we were doing that, none of the, the investment banks and asset management companies was doing it. We started it in BA Consult. So we've been in that space for so long. Now, similar to what we do for the Lagos State government, there are some of us that twice every year, we interrogate the economy of Lagos State. And by God's grace, we give them our own ideas on what Lagos State government should do. So I will answer that straight. It's a combination of both official data and market surveys and interactions that we get. Third one is on pre-election. 2026 is a pre-election year. But somebody asked me that question, I think about a week ago, at a retreat, management retreat of one of the pension fund administrators in Nigeria, and said, if they asked me today, in fact, what they said was that I came to their company January 2023, just before the election, and they asked me who will win. And they said the analysis I did about Atiku, Obi, and Tinubu, that I inferred them that Tinubu will win. And I gave them my reasons after analyzing the three of them. The person now said, okay, what do you think? I said, this is too early. But the elections are coming next year. But one thing we know about pre-election year, dating back to 1998 in the current dispensation, they follow a certain pattern. And there are some indices we look at, apart from intelligence. Intelligence are not things we disclose. For example, we get information from some foreign entities, from even some foreign governments that help us in forming an outlook and expectation when it comes to elections. All right? So we can't do that right now. But one thing I can tell you is that the Nigerian political space today is different than what we had in 2022 as a pre-election year. And why is it different? Different because now there's more political awareness, but as well also there is more divisiveness. And what that means then is that for any politician that will go to the ballot this time around, who is in office today, it will be easy to win election without performance. So what does that mean? We expect a lot of public sector investment in infrastructure this year. And if they do, that will trigger liquidity. That will mean central bank will also have issues managing liquidity, which is part of why MPR may not go down significantly this year, which perhaps is why CBN is more aggressive in expectation of inflation compared to what we did in BA Consult. So it's part of this, what we got here. Finally, indices. What was it before Tinubu? What are the indices now? By all means, where a number of these indices were when Tinubu came into office is by far worse than where they are today. And I can just take, external debt servicing vis-a-vis revenue. Or you take debt servicing compared to revenue. And of course, all of those ratios, if we take them all, by all means, we are in a better position today. You made reference to ASU agreement. So far, so good. ASU has not shut down any university. Okay? Agreement made well ahead and before Tinubu's time. They are all signed now, and the government is living up to its expectation. Even the change in the law, where a professor retires at age 70 and he will earn his pay for life. That never existed in Nigeria. Okay, that just happened. And somebody put something also in the chat box. Fantastic. That there was even something I didn't make reference to. So all of these things are happening around us, and there are signs that things are changing, but we will not keep quiet as advocates. That's the point I made there. We continue to encourage the government to do things that are positive. Yes, the person wrote here, for many years, there was no first casting now in December 2025. But it was a part of like a culture in Nigeria. Anytime we go to festivity period, the fair will disappear. But now we have fair stability, of course, thanks to the refinery that is working in Lekki there. But that refinery is also working because of a government policy that says sell crude in naira. That's part of why Trump is angry with Nigeria. But Tinubu's government did something that nobody is making noise about. What the government said was that when we want to sell our crude, NNPC should receive any currency that they bring. We sell now in euro, not only in dollar. Of course, for the refineries locally, we sell to them in naira. So that took away a portion of our crude oil that would have been sold for dollar. And that means the demand for dollar dampened to the extent of the crude oil we sell in euro and in naira. And of course, interpretation in the White House was that that was not an advantage to the US. It's part of why Trump is not happy with Nigeria. Let me stop there because of our time. Thank you so very much. And respect our time. It's 8 o'clock.